Hello there, this is Bizworld. The Red Sea crisis is expected to not have a significant impact on Malaysia's GDP growth projection of 4.5% this year. HSBC's chief Asia economist, Frederick Newman, said this as the shipments can still be redirected around Africa, though at higher costs.
If it's only a few weeks, then that's manageable. If this were to escalate further, if this were a prolonged disruption to shipment, that would, of course, weigh on trade. But I don't think it's going to be material enough for a large shift in our growth forecast.
On the other hand, the bank expects a modest recovery for the Malaysian ringgit. According to HSBC, as long as Malaysia keeps the interest rate unchanged while the Federal Reserve cuts its rates, it will actually help the country to mitigate the outflow pressure happening since the last couple of years due to interest rate differentials. Meanwhile, the Federation of Malaysian Manufacturers FMM has called upon Malaysian shippers to brace for prolonged disruptions in the Red Sea. This following the escalating of security crisis currently unfolding in the region, which has forced shipping firms to divert vessels to a much longer route. Its president, Tan Sri Sohtian Lai, has urged shippers, including exporters and importers, to refine their business strategies to safeguard their supply chains, minimize delays, and reduce the impact of the situation. FMM also suggested that shippers prepare container bookings and shipping schedules, preferably 1 month in advance, for exports to the affected markets. He also urged shipping companies to honour the pre-booked freight rates given to Malaysian shippers without adjustments. Oil prices slipped today with traders watching out for supply disruption risks in the Middle East following strikes by US and British forces to stop Houthi fighters in Yemen from attacking ships in the Red Sea. Brent crude futures fell 0.4% to $78 a barrel, while US West Texas Intermediate crude was at $72 a barrel following a near 1% gain in the previous session. The benchmarks jumped more than 2% last week to touch their highest intraday levels this year. Foreign investors ended their 4-week-long buying streak on Bursa Malaysia last week, disposing 93.1 million ringgit worth of equities. According to MIDF research, net selling occurred every trading day of the week, except on Monday, when foreigners net bought 29.8 million ringgit. The top 3 sectors with the highest net foreign inflows were utilities, construction and energy, while the highest net foreign outflows were consumer products, transportation and industrial products. Meanwhile, local retailers continued to be net sellers of domestic equities, although at a significantly slower pace compared to previous weeks. Bursa Malaysia ended higher today with broad-based buying breaching the 1,500 psychological resistance threshold. According to Rakuten Trade, if this level can be maintained for an extended period, the firm anticipates additional upward potential. At 5 p.m., the FBM KLCI gained 13.77 points to 1,501.11. Market breadth was positive, with 575 gainers against 456 losers, while 419 counters were unchanged. That's all the time we have for Bizworld. I'm Nadia Azmi. Keep tuning in to TV3.